McCarthy. How you doing?
The Oracle of Galway speaks, not me, you.
I'm looking at 220 million in taxpayers' money going to the Troika in fees.
Yes.
As if we hadn't been kicked enough in you-know-where.
It's like two very large Euro Millions winners. Yeah.
Well, why is this only coming to light now?
Well, no, I think it's only coming to light in terms of the media picking up on it, but actually the NTMA in their 2010 report, who were directly involved in dealing with the Troika and our finances, noted this. So it's not new news, but what is new news, I suppose, is the fact that it's come out and the level of fees we're paying. The background to this is that apparently we had to pay 0.5% on all of the upfront fees, on all the monies we received, and there was ongoing fees. In commercial transactions, Ollie, if you were a large corporation in the private sector and you were going to raise big money from a bank for whatever reason, in those type of transactions, paying some sort of a fee may be the norm, right? The difference, I suppose, here is, number one, it's a public sector entity, namely the government. Number two, the level of borrowing is nothing like, obviously, what anybody would be raising in the private sector, because we're into the billions here. And obviously that results in a very high level of fees. My big problem as well with this is, apart from the fact that I don't like to see 220 million of our money going in fees, especially, to anybody. But also the fact is that the interest rate that the IMF and the ECB and the Troika are charging us is quite high anyway. But these guys, remember one thing, they still are commercial entities in their own right, and you know they show a profit, you know, the IMF and the others at the end of the day. So everybody's making out of us. But unfortunately, we couldn't have avoided the bailout, and I won't go into all that. That's all history at this stage. Let's
move on to something a little bit more positive, if it is. Property prices increasing 2.3% nationally in the year to July.
Yeah, I mean, look, to be honest with you, we've gone through the mill over the last 5 years, as we know, with the property market, and I think anything that comes out is good news, and you know, you have to temper it, I mean, and not let people, I suppose, lose the run themselves. Anything that shows an increase in property values and shows that we've turned, if you like, the curve is moving upwards, has to be very positive. Those figures are a bit skewed in the sense that they come from the Central Statistics Office, and there was a big increase in Dublin, and then there was actually a slight fall outside Dublin. When you add the two together, you come up with this in excess of 2% nationally. But that outside of Dublin, again, in my opinion, is also a bit skewed in the sense that it doesn't show the figures at any stage what the property values were in the cities outside of Dublin, like Galway, Limerick, Cork, Waterford, for example, right? So it takes in rural areas, it takes in country towns. So if you were to ask me, you know, what has been the increase in Galway, I can't tell you, because it hasn't broken down these figures. But I think a lot of the auctioneers will tell you that certainly property prices have seen a reasonable jump here in Galway as well.
Well, that's a good positive sign. Some reports as well suggesting that Investec Bank to enter the Irish mortgage market. Now, this would be the first bank to enter the Irish mortgage market in about 5 years.
Yeah, I think this is very significant, because what the Irish mortgage market needed was somebody new coming in. Somebody coming in who was going to provide finance and kickstart people, you know, like first-time buyers getting into the market. And Investec are coming in. They're a South African bank. They've been operating here for many, many years on the investment side and deposit side. So they'll be well known to people who have had dealings with them there. But it's the first time they've made any steps here in relation to mortgages. And why I think it's significant is that, as you rightly said, it's the first lender to come into the market. Hopefully they will be providing products that will be attractive, particularly to the first-time buyer market. And the other thing is that there's a suspicion, or not a suspicion, I suppose, an expectation that their variable rate on mortgages that they will be charging will be a good bit lower than the likes of AIB and Bank of Ireland, who are charging punitive rates at the moment, because, you know, they're treating their customers like fish in a barrel because they can't go anywhere else. So anything that may force them to bring down their rates in terms of competition has to be positive. And I hope that they take a reasonable chunk of the mortgage market, because if they're going to have, I suppose, an influence on it, they will have to try and grab business. And that business that they are intending to enter here with mortgages will be sold through intermediaries.
Well, let's hope, if nothing else, they shake up a little bit the establishment that's there at the moment. The Personal Insolvency Bill is up and running?
Yes, and personal insolvency practitioners, what they call PIPs, who are people who intermediate between the client and the bank, have been appointed, only a small number in recent times. This personal insolvency bill, I hasten to add, and I've covered it many times in this piece, Ollie, is not going to be the cure-all for a lot of people. It's really for those who are desperate. And why I say that is because it comes at a cost. And the cost basically is that you are... your finances are controlled for the period of 6 years that you're in this process. You're never going to be able to get credit during that period of time. Your name is going to be put into a public register, believe it or not, and you're not going to be able to blow your nose if you're in this process. Now, for some people who are listening this morning who are in dire straits, they say that has been no problem, and there's a certain sector of people who will have to enter it. But there are others out there who should be sitting down and negotiating with their bank, and a lot of banks, by the way, I think will want to negotiate with people rather than seeing them enter this process, because if they enter this process, they suffer a write-off. And by the way, one big flaw in this bill, it's voluntary. In other words, if the borrower and the lender don't both agree to enter it, it can't happen. So in other words, a lender has a veto, if you like. There's all sorts of elements which have been publicised prior to this too, in relation to things like that you'd be allowed, an amount of spending you're allowed, an amount of assets that you're like, personal assets that you're allowed to hold. And I mean very personal assets, things like jewellery, your car, whatever. Again, my big problem with it is I think an awful lot of this bill has been skewed by the banks in terms of when the bill was drafted with the government. And I have a big issue with one simple item, and that's called dignity. I think the dignity of the people who are in this position is certainly not catered for in this bill.
Final point then, Dave, on our finance slot. There's another scam going on ATM machines. Not a new phenomenon, but this one slightly different.
Yeah, the Garda Serious Fraud Office are warning people. Basically, what is happening is you go up to the machine, you stick in your card, there's a device in it. You still get your cash out, but the device holds on to your card. A fella taps you on your shoulder. He says, "Oh, you can't get your card? I'll get your card out for you." And he's also in the interim, while you've been fiddling with the machine, has taken down your PIN number. So he manages miraculously to remove the card. But while he's doing it, he's actually handing you back a different card. It's not your card, and you think you have it. You haven't checked it, and you walk away. So, look. There are no good Samaritans, unfortunately, when it comes to ATMs, so make sure you don't get yourself involved with anybody at an ATM.
The rule of thumb, that's the bottom line.
Exactly.
If somebody comes next or near an ATM, tell them in no uncertain terms where to go.
Exactly.
Dave, thanks for popping into us.